In this video, I'm going to share with you a strategy I use over and over again to make thousands of profitable trades every year. It's a strategy that can be done in all account sizes, from very small to multi-million-dollar accounts. If you like better entries for your stock and option trades, I think you're going to love this video. To help me explain this strategy to you, I'm going to take you back to elementary school. Now, you may or may not remember elementary school, and you may or may not remember learning how to read. But I think you'll agree with me that it probably was a challenge to learn how to read. But once you learn how to read, wow, the world really opened up to you. You had all these possibilities available to you. This video is one of those world opening up moments, but when it comes to stock and option trading. I'm going to share a tool with you that if you learn it, you can use it the rest of your life and can really open up the financial markets to you. This strategy involves using a combination of technical tools that will greatly improve the odds of you winning your stock and option trades on any time frame chart. More specifically, I'm going to show you how to use the 50 and 200 exponential moving average, as well as support and resistance levels and supply and demand zones to put the odds of you winning your trades drastically in your favor. And it's actually not as complicated as you might think it is. And once you get it, you got it for life. Let's get started. Before I share with you all the details on the trade I did using these strategies, I first want to give you a very important tip. I'm going to call it a pro tip. Before you use any technical analysis tool in an ETF or stock, you first want to make sure that that stock or ETF has a history of adhering to the rules of that technical indicator. Here's an example of one that does not. I'm looking here at the ticker symbol PAYX, which is paychecks. And notice here what happens on this daily chart around our 50 and 200 moving averages. Notice that although it does tend to trade around them, it tends to ignore them. Right now in this time frame, I would not use the 50 and 200 moving average on this chart to enter and exit trades. So I just want to put that in your brain because it's a very important piece of information to have in there. You want to make sure that whatever technical analysis tool you're using, that the ETF or stock has a history of honoring the rules of that technical indicator. And the three technical indicators I'm going to share with you in this video are ones that a lot of stocks and ETFs adhere to the rules. And here's an example of that. Now we're looking at the hourly chart of CME or the CME Group. And there's several things I want to point out to you here. First, notice how it tends to trade around its moving averages. First, the green 50 moving average. Notice that it does tend to honor that as resistance when it's trading below that area. Resistance here, then a resistance here. Then when it did push through, it became support. Then it pushed back through and resistance. It pushed through, broke through. And then right here when it pushed through again, then it began to serve as support. It found resistance at that 200 moving average, which we would expect. When it pushed through it, and then came down and found support at the green 50 and red 200 moving average. Overall, although it did push through several times, it then continued to find support at that moving average until it pushed below it again. Once it pushed below it, it started as resistance once, resistance twice. And since then, it's been serving as support for it. You see it pushed through, came down, found support around it, and since then it's been finding support above that green 50 moving average. This yellow area is the hour I did the trade I'm about to share with you. So overall, I like that CME was finding support and resistance around these moving averages. That tells me it does tend to honor the rules of the moving averages on this hourly time frame. I then looked at the daily time frame and saw the same thing. Notice again that around this green 50 moving average, it tends to find resistance as you see here, and then once broken through, it tends to find support as you see all in here. Resistance once it pushed through below it, and then support, and then once it broke through again, resistance, and now it pushed through, and now it's finding support at this red 200 moving average as you see here on the day that we did this trade. So overall, I felt comfortable that CME, it does tend to find support and resistance around its green 50 and red 200 exponential moving average on this daily time frame. So that was the first factor. It tends to honor the rules of the exponential moving averages. Now what about support and resistance, or supply and demand? Let's look at that. Now I've represented that with these boxes here. Notice what tends to happen around these support and resistance areas are these supply and demand zones. In this daily chart, we're going back about a year and a half. And notice what's happened around those areas. Notice that when it reached the area around this white box up top here, around the 220 area, that tend to find resistance. It meant that sellers tend to sell it off when it reached that area. So that was a supply zone. Now let's drop down one zone below that. Let's look again for support and resistance areas. Notice this is an area that served as support and resistance. Here it served as resistance. Then here it served as support, resistance, support, and resistance. And now we found it back at this area that served as support and resistance multiple times. And notice what happened the day before. It pushed through that area of resistance. That meant that sellers tried to sell it off, but there were enough buyers that they bought it up. In fact, we see a nice big green candle 2 days before. We see the day before it closed above that resistance area. So now on this day, August 20th, I decided to take a neutral to bullish position in CME. And before I show you the actual trade, I want to share with you one more support and resistance zone, this one down here. And notice what happens around this 195 area. Going back to early 2024, notice this area served as support for it. Then when it came down later that year, again served as nice support for it. In fact, it held as support for several months. So when you're looking to enter and exit trades, look for these support and resistance areas or supply and demand areas. They can be important zones where buyers and sellers tend to act the same way over and over and over again. So when I saw CME breaking out above this area of resistance, I decided to take a neutral to bullish position in it. And it wasn't just this resistance area. Notice these moving averages. It had broken through the green 50 and red 200 moving average on this daily chart. It had come down, and for about 2 weeks, it found support that area, and then it appeared to be taking off. To me, this was a green light telling me it's time to take a neutral bullish position in it if earnings aren't coming up and earnings weren't coming up. So here's the trade I did. As you see on August 20th, I sold to open the CME October 18th. The option expired in about 2 months. I sold the $200 cash care put option and got $2.20 per share for it. Well, how did this trade turn out? Well, fast forward about 1 month. And remember, we sold a 2-month option. On August 20th, we sold the October 18th option. But now we fast forward just 1 month to September 24th, and notice what we did. We were able to buy to close the CME October 18th $200 cash care put option for an 80% profit. It only cost us 42 cents per share. We had used this simple strategy that I've used thousands and thousands of times to enter a high probability trade, and we won. We were able to close a 2-month option trade halfway through the trade. We drastically improved our return because we had used technical analysis as a very good entry point. Before I share another example with you of how to use these technical analysis tools to enter another high probability trade that we did, please in the comment section below, tell me what technical analysis indicators you like to use. Which ones have you found work best for you over the years? I'm interested to see which ones you enjoy using. Almost forgot. Before I move on to the next trade example, let me show you the chart on the day we exit this trade. Let me show you what happened once we entered that cash care put option. Notice that for the next several days, CME kind of consolidated. Then actually came back down and retested that zone or that area for support. And again, it held. Then had a nice advance and then came back down and retested it again. That same zone that I had drawn there, retested it for support, and again, it held. Then it had a nice advance, and look where it found resistance. The zone above it that I pointed out to you earlier. It then came back down and notice what it tested, that green 50 moving average. And then it began to take off. So this is the day that we exit this trade for an 80% profit. We put technical analysis in our favor, and it worked out perfect for us. Now let me share with you another example of how to use these same technical analysis tools, but it looks a little bit different than the first one I showed you. Remember with CME, we had these nice support and resistance zones as you see here in these boxes. Well, in this next example of the ticker symbol CMI, we didn't have all this nice support and resistance zone because the charts were trending up. But what we did have is this nice thick white support line, this upward sloping trend line. And we also had our exponential moving averages. Here you see the green 50 exponential moving average and the red 200 exponential moving average on this daily time frame. And here we see that CMI is playing by our technical analysis rules. It tended to find support resistance around those moving averages and around this upward sloping trend line. So here we see the pattern of the chart on this daily chart. We see it would have a nice rise, it come down and retest that area around the green 50 moving average and also this upward sloping trend line. And then had another nice rise about 2 weeks before we entered this trade. It came back down and was testing again that green 50 moving average for support and appeared to be finding support there. That also put it right at this upward sloping trend line. Now just a note here, I connected several lows here on these candlesticks. And what you will see here is the day before we did this trade, notice that CMI had broke through that area, but its body held that support. Now with it being around the 50 moving average, I decided to take a bullish to neutral trade in CMI. So here's the trade I did. On September 12th, I sold to open the CMI October 18th 270 put option and got $2.17 per share for it. So that was the option that expired in a little over a month from the day that we sold it. Remember, we sold the 270 strike price put option. As I go back to our chart here, notice that not only did I have technical analysis in my favor, but I also sold a put option that was well below this area of support and this 200 moving average. It was way down here below both those potential areas of support. So I felt very confident this would be a winning trade for me. And you know what? It didn't take long to turn into a winning trade. Fast forward less than 2 weeks and CMI experienced a nice advance of right at 10%. So although we had entered this trade on September 12th, we've been prepared to be in it for about a month. On September 24th, we bought to close the position out for an 80% profit. We bought to close the CMI October 18th 270 cash care put option and it only cost us 40 cents per share. The simple strategy I want to make sure you understand is how to use moving averages and support and resistance or supply and demand zones to enter high probability stock and option trades. And these can be done on any time frame. As you saw, they can be done on the hourly time frame, the daily time frame, the weekly time frame, even those shorter time frames like the 1 or 2 minute chart. You just want to make sure that the stock or ETF tends to adhere to the rules of the technical indicator that you're using. In this case, it's the exponential moving averages as well as supply and demand zones or support and resistance. Using moving averages as well as support and resistance areas will drastically improve the odds of you winning your stock and option trades. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. Let me ask you a question here. What's better than having one really good trading strategy? Well, how about having 2 of them? At the video in the link above, I share 2 of my favorite option and stock trading strategies that work in every market. So please check them out. Until next time, happy investing, and we'll see you again soon.